morning students, welcome back to today's class. Today we are going to see that Accountancy chapter 5, Accounting Ratios, video number 7. Here we are going to see that the last one of that solvency ratio, that is interest coverage ratio. As the name indicates, here you can see that this ratio is showing the relationship between how can interest payable out of that profit, how can that or how much that profit can be payable, or how much profit can be payable. That relation is related to profit. In connection with that profit, how much interest can be given for that the long term debts. That relation is showing you, or that relation we can show from that this interest coverage ratio. By name itself you can understand that to find this, one formula is that net profit before interest and tax by interest on long term debts. To find that interest coverage ratio, net profit. What is the formula? Net profit.
Profit before interest and tax.
Before
Interest and tax.
interest and tax upon
Interest on long term.
interest on
Long term debt.
long term. This is a formula. So in order to find out that interest coverage ratio, that means for long term debt, how the business out of its profit, how the business can cover its interest or interest payable. And to find that, we are using one formula, that is net profit before interest and tax. We need to find out that net profit, that is before paying that interest and tax. If we paid that interest and tax, we add in that the net profit, these two amount. Sometimes we get that net profit after paying that interest and tax. In that time we need to, most time that net profit means that is after tax and interest, that net profit is saying. So in that time we need to find out that net profit before tax and interest. To find this net profit before tax and interest, we are using one formula, that is the principal amount. That means net profit before tax and interest and tax. In order to find this, we are using that net profit after interest and tax. That means net profit into whatever that net profit into 100 upon 100 minus tax rate. How much is that the tax percentage? That percentage. Tax percentage. We use this formula to find that net profit before tax, not interest. Okay. Net profit before tax. In order to find this, we are using this formula. That formula is that net profit after paying tax. If we are getting that net profit after tax, then that amount we write here. Net profit after tax. That amount we write here. That is we consider as the principal amount here. The principal amount into 100 upon 100 by the tax percentage. In that time, that how much tax paid, its percentage will be given. That percentage. Then minus how much is that percentage amount. If it is 50% or if it is 10%, we subtract from 100. Then we get that 90. If it is 20%, we get here 80. Like this. Clear now? So here is one question we can solve, then you will understand better. So illustration number 11. From the following details, calculate interest coverage ratio. Net profit after tax rupees 60,000. Here it is given that the net profit after tax. After paying the tax, we got that net profit. That means 60,000 is our net profit. All expenses is paid over. And it is saying that 15% long term debt. Then like, and tax rate is at 40%. And one long term debt, it may be debenture like long term debt, so that is 15% long term debt. Debt. How much rupees is there? 10 lakh rupees. 10 lakh rupees, and if it is given like this, that interest rate is at 15%. Okay. If it is saying that 15% long term debt, this is the amount, principal amount, how much we took as the loan or long term debt is at 10 lakh. Its interest rate is given in the beginning. Okay, you don't get confused what is this, especially in case of debenture or share. In that time, when you are learning in debenture, you will learn like this. Yes, 10% debenture of this much rupees. That means that debenture's interest rate is given in the beginning. So here this given is at its interest rate. Okay, you understand now? What is this 15% is mentioned? If long time debt means we took that loans for long time. Its interest rate is at 15%. That is given beginning. That amount how much we took as loan is given here 10 lakh. And tax percentage is also given. Tax percentage is at 40%. But here you understand that already we paid this 40% of tax. After paying that 40% of tax, we got that 60,000 rupees as profit. From profit only, how much is the profit? From that before financial statement of a company, you learn that profit and loss account. In that you can see that profit we are finding out, and last we are reducing that tax. After that tax we are reducing separately. That means over the profit we are paying that over the profit certain percentage we are paying as at the tax. So after paying tax we got that is net profit. Clear now? So now we need to find out, we need to go back that the net profit before paying the tax, or profit that we cannot call that as the net profit, that we can call only as that the profit before paying that the tax. Clear now? So to find out that we are using that formula as we discussed earlier. Here the profit amount, now net profit is at 60,000. 60,000 into 100 upon 100 minus percentage is 40. Now next step is at 60,000 into 100 upon 100 minus 40. 60. Then 1 into 6 lakh now. 60,000 into 10. 6 lakh now. 6 lakh divided by 6. 1 lakh. 1 lakh, what is the amount? This 1 lakh is the net profit before tax. And interest rate we need to find out. What interest rate is saying or given here? Interest is at 15% of this 10 lakh. Then we need to find out that 15% of that. How much is it? 1 lakh 50,000. What this is profit before, net profit before tax. And then now we find out that the interest is at 1 lakh 50,000. So what may be our net profit before interest and tax means we need to add this 1 lakh 50,000 plus 1 lakh. You understand? Here the equation is saying that in order to find out that interest coverage ratio, we need to take that net profit before interest and tax. Before tax we got that the profit was 1 lakh. And now interest rate also we find out interest rate is at 1 lakh 50,000. Obviously you know that from that some amount we already reduced that interest we reduced, tax also we reduced. After that only we got that 60,000. So tax, before tax we find out that amount is at 1 lakh. Now before paying interest also, interest ratio we find that 1 lakh 50,000. So net profit before interest and tax is at this 1 lakh 50,000 plus 1 lakh. 2 lakh 50,000 is at 2 lakh 50,000. 2 lakh 50,000 upon what amount will come? Interest on long term debt. How much is the interest? 1 lakh 50,000. This we are showing in the times, okay, not in the ratios. This we are showing in the times, a number of times. How much time is there? 1.67 times we can pay that interest, okay. That means when compared with the profit, we can pay that interest 1.67 times. Thank you.